Hey guys, how are you? Vladimir Ribakov here from Traders Academy Club, and this is the Forex Triple B weekly review for the trading week between 23 to 27 of September, basically the previous week. This is a new format where we try to share in educational view the trades that we took and traded in the previous week. So what I want to do now is to review the trades we took, explain the logic behind them, what lead us to our direction, to our decisions. Previous week was pretty active for Triple B in short-term trading. I cannot cover all of the trades. I would like to cover those who are have the most value. These trades have the most value for you from a technical approach and for trading decisions that you apply. The first one I would like to explain was the pound franc sell that we found very interesting. So it was a 15 minutes time frame short term. And what was the logic behind the pound franc? Now, as you know, the first way I always approach to my trading is to make a general analysis, to choose my trading directions, and then and only then to apply that for trading. So, long story short, according to the pound versus the franc, this is what we saw. The Bollinger Band duplication, bearish hidden divergence that came in place, 125 as a psychological resistance area, and we are very close to a clearance zone. 4-hour chart was a cycle by itself on each of the daily legs, providing us here a classical bearish divergence. That by itself should generate a corrective cycle. The first leg that we experienced was this. Looking on the lower time frame, it was obvious and clear that this is a bearish structure of lower highs, lower lows. The idea from here was to look for the sells that could generate the second leg to the downside. And if we take a look here, we clearly got the two waves to the upside, one correction and two. The second one was big, did not generate any good alert, but this one provided us the sell, and as you can see, the protection was out of the Bollinger Band from the higher time frame. The road for the sell decision was very easy, straightforward, and provided us a wonderful sell opportunity, and in that case a very nice profit. Next trade was the dollar versus the franc. The idea here was completely the same logic like the pound franc, and long story short, we have been in a triple cycle of the daily time frame expecting correction to the downside. The 4-hour chart provided us one leg and we expected the second leg to be in play as well. And while we were developing the two waves and the slope of the Bollingers was to the downside, we were looking for sell opportunity, and it was simply classical double cycle to the upside right here, and the idea was going for the sell. So even though that the short term provided the profits, we could of course cash it out, and the fact that the 1-hour chart had here a sort of a double bottom, let me just show it here, sort of a double bottom, the expectations, at least like then, that we could see the 4-hour chart going slightly lower until it builds a divergence. In that case, it did not happen. It was a mistake from our side, as per the management, as the 1-hour chart was blocking here with a divergence. The correct thing to do was to cash out. We were expecting a bit more. It was a wrong read, and we paid for that. Making wrong decisions, meaning simply will have to pay for that. So the idea of the sell was to ride with the corrective cycle, and the 1 hour chart blocked this move down. 15 minutes reached its short-term target on the opposite Bollinger Band, almost. Not almost. It had all the things for correct cash out. We decided we want to go, in that case, lower until the 4 hour will develop the divergence, and we paid for that. That's very important. You see, if you change the original plan, and it could turn to be against you, as simply as that. So in that case, we paid for that. Another one I want to show here was the euro versus the Australian. And to explain the sell here, it was like basically two sells that we did. First one that came into the profit, and the bigger one after that that again provided the same idea for a sell, and this time we paid for that, and it was a loss. So let me just show it. So here we are. Basically the idea here is very simple. The 4 hour chart has a bearish structure, bearish trend, lower highs, lower lows. Two waves as a correction, break of the trend line. From that point we are bearish. The 1 hour chart following the same idea for us by making the lower highs, lower lows by itself. For us it's a sell the rallies. And while the first one, right here, managed to deliver a very nice, let's go backward a bit, managed to deliver a very nice opportunity with these two waves and bearish divergence, provided us the profits. The second one looked promising as well with a bearish divergence by itself. We took it, but in that case the market never agreed with us and we had to pay for that. The trade continued to the downside as expected, but the correction was, in that case, slightly different. But the lesson from here is that the trending structure could be defining your trend very correctly, but in the short term, the spikes to the upside, to the downside, back and forth zigzagging could simply make the moves trickier, and that's why the short term is normally riskier. In that case of the Euro Aussie, we profited one and we lost another part of the game. Next one which I wanted to explain is the Euro versus the Pound in the buy trade that we decided to take. Euro Pound is was very good, technically speaking. The way I love to see them developing band to band movement with a duplication, with a bullish divergence and a double cycle right below a clearance area, right below the 200 moving average, right next to the psychological level 08750, quarter of a figure number. Very good sign, and the 4 hour chart also delivered us a great bullish divergence all the move on the bottoms. The 1 hour chart delivered here for us the structure of the higher highs, higher lows, which defines a bullish trend. The idea was very simple from here, looking to buy retraces. We got the 4 hour chart slope bullish. We got the two waves that we were expecting, very small risk and very nice potential in return. Oops, sorry. So we decided we are taking the trade. It was simply wonderful. After consolidation during the night time, the morning session with London and Europe coming in play, the definition of our bullish direction turned to be a very correct thing. Rest of the trades also were an interesting development, but I chose this one as the most valuable for you to check, simply due to the pure price action definition. How do we choose our directions, relying on the higher highs, higher lows, lower highs, lower lows structure in the multi-time frame, verifying with the divergences, creating our expectations accordingly. I will not go over all the trades to waste your time. I chose the ones that have the most value for you, and I wanted to cover them and explain. Of course, if you have any question about any of the trades, you can contact me on the comments. Generally, let me know, what do you think about such videos? Do you find them useful? Of course, mainly if you have your Forex Triple B. And for all those of you who have the Forex Triple B, I just want to remind you that you have a unique, dedicated Telegram channel for Triple B traders, where you can share your ideas, ask your questions, enjoy our ideas that we share every single week for our followers, enjoy the discussion, and improving how do you use this wonderful trend riding system, kind of semi-automated in that case, in your favor. So that's all for this video, the weekly review of Forex Triple B of 23 to 27 of September 2019. Thank you very much for your time watching this video. I wish you a wonderful week, a wonderful trading, and I'll see you on the next videos. Yours, Vladimir Ribakov.